Well, hello, folks. I'm Ellie Little, and this is your daily NeoTA wrap. Where we taking a look at these markets. We do it from a neoclassical perspective, each time asking ourselves what happened today, what does it tell us about the coming ones. We do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel L8 Little. As far as what happened today, pretty good day, actually. We're probably seeing the run up into the Fed, percentage wise, up about 1%, 1.5% at best. Started to see movement back into that area that I thought was significant, and we'll look at those charts and see what we think about them. We had copper up, and that was about the only commodity, well, actually oil too, that could manage a gain. Everything else was kind of down. Bonds sold off, and nothing else really. All right, dollar was up a little bit. So as far as what's happening with these markets, we start our review here with the S&P 500. So the last time we spoke, we talked about this area as being significant on the S&P. We almost got to it today. There's also that swing point high just above it. But the main thing is we did get into and over this resistance zone right here. And that move over that zone, gets us back into this bar that failed and gets us back above that little sell area, right, which has been tested multiple times, and lays out the possibility of actually getting over the swing point high as a result of the Fed or into the Fed, either one. Now, the big picture, of course, and we talked about last night again per a viewer question, is to see if you can get all the way back up to this retest, regenerate zone. I mean, that's what it wants to do. Probabilities favor it to do that at some point. It doesn't have to be now, but usually that does take place. Now, the fact that it's been more than 6 bars says there's a high probability they'll sell it when it gets there, but that's a fairly good piece up still just to get to that price point. And so if if the run is really starting today and actually continues on the Fed, that looks to be the area. I'm going to flip over to the NDX because the tech strength is the strength in the markets right now. If we put up that bearish retest regen here, you can see we're into that zone now. Now we did it once before back in this area once before, and I'm talking about this particular bar. And now we're over that bar, so we're getting over the top of that bar into the zone. That zone is where you would typically see price rejected, and you would see a continuation back down, right? That's what it means to retest and quote unquote regenerate to the downside. Second test though, it's not the first test. You had a test here already. Now you've got the second test. Second test, the probabilities dropped. They dropped to about 60%. First test, it was about 90 on this particular setup. So as it comes back in on the second setup, it has a higher probability of actually getting at least to the other side of that zone and potentially actually getting over it and breaking that whole bearish retest regen down. That would turn this whole picture around to sideways instead of to the downside, and that's what this market is attempting to do, and it's the NDX that is trying to lead the way. If I look at the Russell now, the Russell has been the weakest of the, well, it actually hasn't been the weakest, but it's definitely been probably the best one in terms of giving us signals. The Russell also is now over that area from last week. It's made a new high, basically. It's in this zone still, so I wouldn't consider the Russell really going to make the run up to the bearish retest or regen zone unless it can get over this price area. That bearish retest regen is way up here, but just like the S&P 500, it's starting to show signs of life and trying to push on up and work its way up into that zone. That's the indexes. If we look overseas, now last night we were looking at Europe and we were saying to ourselves, now maybe we're getting some sort of clue out of Europe, not so much on the DAX, but it was on the CACs. Let's look at the DAX first. That's the major index in Europe. The DAX actually pushed more volume today, and it got under and over. So this thing could go either way. The thing I like about it is that it didn't continue down, because the CAX was the one trying to tell us that we were going to get potentially some more downside. But actually that one reversed as well, had about the same amount of volume, and I believe it actually went over. No, it didn't get over the high. It did get under the low with a little bit more volume. So that's a little bit more shaky in terms of what it's going to do next. Remember, these things are doing the same sort of thing. They're just in different levels than we are. Here's the bearish retest regen. You've tested multiple times the top side of that zone and have been unable to get over it. If I pull it back again to the DAX and we look at it one more time, that zone on it is much higher, and that looks to be where it wants to try to trade to. If it does trade up to that area, right, that is a high probability to get sold. So if you take Europe, the DAX, the CAX, the NDX, the NASDAQ, the S&P, you take them all and you wrap them all together, they're all kind of set up in the same manner, and all could push into the zone before it gets a real rejection and the potential for something more to the downside. If I look at Asia proper, I'll start with Hong Kong. You know, Hong Kong just can't get off the ground here. They're trying, they can't get anywhere. This market's still struggling, and I think it's going to continue to struggle because Asia has some issues, and a lot of those issues are tied to what the Fed is trying to do. So if the Fed comes out and does nothing, I think there's the potential for these Asian markets to actually work a little bit higher. If the Fed comes out and does something, and especially if that something looks like it's going to continue to do something, then we're going to see more problems. Here's the SSEC, which is the composite index in Shanghai. The volume is at the bottom. I mean, we're not talking huge volume, but there's a little bit more volume down there. This started to drop again last night, dropped about 2.5%, I think it was. Yeah, excuse me, 3.5%. It looks like it's going to try to come in and test that zone again. So we've got some real issues in Asia. I think a lot of those are tied to what the Fed is trying to do or wants to do, or at least what people think it might do. Finally, if we look at Taipei, Taipei actually started to roll over a little bit after making that last push up. That push up I'm talking about is getting over the swing point high here, so it gets over it. Now it's going to come back and try to do a retest, regenerate higher off that. If you pull it up farther and you see up here, you've got the bearish retest regenerate. You know, so you could kind of conceive of a situation where, of course, it pushes up and then pushes back, you know, down to this area, and then potentially pushes again on up into that bearish retest regenerate zone. So I would be looking in this area here, right, as a place where we might see this price point come back to. Big news, of course, is what is the Fed going to do? And, you know, with the action that we saw today, there seems to be some amount of, I wouldn't call it hard evidence, but some evidence that we are going to attempt to push higher off the Fed. I don't know what the Fed's going to say, how they're going to say it, or why they're going to say it. But if I look at some of the sectors as well, all of these are coming back to try to do their bearish retest regenerates. And so it looks to me like what we're probably going to see is we're going to see these markets push up into these areas. As they get into these areas, the ones that are closer, I've got the IBB up right now. The ones that are closer are probably going to stretch to the back side of that, you know, and try to get to the top of that zone. The ones that are weaker are going to try to get into the bottom of the zone. And then we're going to see the indexes do the same sort of thing. And when they do that, then that sets up the potential, right, for the pullback. But first, you got to rise up there to actually get rejected and pushed back down. And so here is one of the weaker ones. This is the financials. Again, financials are going to try to get into this zone. You can see they have a ways to go to get there, but they're doing the same thing that all the other sectors are doing. and that is they're working their way up to that level. Again, probabilities after a big break like this, very high that you're going to see some selling when you get to those bearish retest regenerate zones. So if in fact we do get to push up, it's a push up into an area that probably will get sold. So don't lose sight of that if that in fact is the way this thing plays out. As far as my opinions and what I think, if I pull this back in one more time and put it on a weekly view here on the NDX. NDX is the strongest one. So if you're going to get the move higher, it's going to come from this one first. Because as you can see here, this one made the big plunge like everybody else and actually finished up into these retest, regenerate zones off these swing point lows. On a weekly basis, the stronger index is testing already into one of those zones, and the one we're testing into is this one. So we're already into that one. We're just today get over these two highs. Now we're pushing in into the second of the two. And if you ask yourself, where's the area where this really should get hard? It should get hard here, and then it should certainly be hard up again in this area. So, my expectation is that the NDX leading us up is going to drive all the way to this price point here before it gets rejected, if that's what it's going to do. And that price point is the top of the lower bar, and that's this one. That's 44.67. We're sitting at 43.60, so another 100 points to the upside potentially. So we're talking 2.5% to get up into that area. That would be where I'd expect this thing to get rejected. And if I look at the S&P 500 from that same view, the S&P, of course, is just beginning to get back into the retest regens off these swing point lows, which measure quite a ways up. And so on the weekly, there's really nothing here to give you any kind of clues until you get back into these price points. And I'm talking about these swing point lows. Those will be the key ones on the way back up. And that's around the 2045, which actually is the coinciding with the swing point lows. If I pull back up the daily with these swing point lows here, the 2042 area. So again, NASDAQ about 100 points higher. 1978 is the close here, 2040, so about 70 points. If it's going to get up there, it's going to have to, catch up with the NASDAQ. You'd have to probably see rotation towards the end to make that happen. In other words, the NDX pulls up to that price point, and then the SPX kind of keeps moving while the NDX kind of hangs out, and the NASDAQ kind of hangs out. And then they all get, synchronized, and then they potentially roll back over. With today's action, I think that's a higher probability than I did last night. Last night I talked about, it's a good potential that could take place. Tonight, we got a little bit more evidence that in fact this may in fact be what's going to happen. But pre-Fed action is no guarantee of post-Fed action. And what's really going to matter is what the Fed does and how the market reacts to it. And because we don't know what the Fed's going to do, what you have now is you have people positioning. It's not a big, wide price spread. It's not heavy volume, any of that. It's just positioning in front of what the expected news is going to be. And that expected news from the action that we're seeing is telling us that they think, the larger players, those that are pushing this market, think that this Fed isn't going to do anything to rock the boat. And whatever it does, it's going to try to push this market back higher. And that's what they're positioning for. The real shocker would be if the Fed did something different. I think the probability of a large increase is like nil. The possibility of an aggressive move followed by hawkish tone is probably next to nil. And so that's what these players are positioning for. And if you go over and look, and I want to show you one last chart here at a bear chart, and this is the HDGE, which is the equity bear ETF. made that huge spike, and ever since it is starting to sell off, and now it's really starting to pick up some volume on the way down. I think in a nutshell, the case that we have is we have too many people looking for this market to sell off, and they're getting caught in a market that won't sell off, and they're having to actually close those short positions, in particular close those options positions, which on Friday, many of those are going to expire, and they're going to expire worthless as a result of what's happening. And so we're seeing a lot of those positions get closed, which of course puts pressure on the market to rise. So in other words, if the puts get closed, pressure on the market to rise as a result. That, I think, is what we're really seeing here. That could pick up tremendously on Friday if the Fed does something good, and then get a nice big push off of that, and then some sort of a pullback on a post-options expiration type trade the following week, maybe even Wednesday, Thursday the following week. Doesn't have to be Monday. That looks like what's happening. That looks like what's taking place under the covers here. So if I were leaning one way or the other, I'd be leaning long. Hopefully that's what you're doing. Folks, tell a friend, tell two. I'm LA. That is and was your daily NeoTA wrap. Have yourself a great night, and I'll see you next time. Good night.